What's up, freaks? Vibes are high in Austin. Great Bit Devs last night, hosted by the team at Unchained Capital. Great time meeting the freaks. Shout out to you, freaks, if I met you last night. It was very enjoyable. I love meeting freaks. Love hanging out with Bitcoiners. Bullish on Bitcoiners. Bullish on this episode. It was an in-person episode. First in-person episode in quite a while, in some months. And there's just something about an in-person rip that makes the heart grow fonder for in-person rips all the time. Sat down with Chris Stewart and Ben Carman from the Suredbits team. Talked about everything, DLCs, Speedy Trial, cows, more cow talk, more cattle talk, more farming talk. A lot of things. Enjoy it. This was brought to you by our good friends at the motherfucking Cash App. Cash App's help you stack sats, send sats, receive sats, sell sats, if you so please. If you so please, don't recommend it, but if you so please, not investment advice. You can do that on the Cash App. You can DCA in the sats. You can buy daily, weekly, bi-weekly. If you so please, set it and forget it. Highly recommended. None but financial advice. You can get sats back with their boost program. Yeah, you initiate a Bitcoin sats back boost. You go spend money wherever Visa's accepted and you get sats back. It's pretty beautiful when it's available. What else do we have? Yeah, we're saying sats because we're changing it. We're helping to shift unit buys. People aren't buying fractions of Bitcoin, they're buying whole sats. It feels better, it feels stronger, makes you feel more like a man. Stacking whole sats. And you can do it on the Cash App. Cash App can be your bank account too. They're offering account numbers and routing numbers. You can get your paychecks direct deposited into the app. Stack sats easier. If you haven't done so already, go to your local app store, download the Cash App, and use the code STACKINGSATS. That's STACKINGSATS. You're going to get $10, and $10 is going to go to our good friends at Owls Lacrosse. That's Owls Lacrosse. Owls Lacrosse. This rip was also brought to you by our good friends at Hodl Hodl. Hodl Hodl. Guess what, U.S. citizens? You can interact with their Lend product. Lend.hodlhodl.com is here for you freaks that are looking to get liquidity with your Bitcoin, but you don't want to sell your Bitcoin. You want that tax burden. You don't want to give up your sats. You want to keep your sats, but you need liquidity. You go to lend.hodlhodl.com. No KYC, no AML. You're not sharing any information. You're leveraging Bitcoin's native multi-sig properties. You're putting your Bitcoin in a multi-sig wallet. You have one key. Hodl Hodl has one. Your counterparty has another. And you can always see that your sats are locked up in that escrow. So you know it's not being rehypothecated. You know that if you're going to be paying back that loan that you're taking out in the form of stable coins, so you put Bitcoin down as collateral, you get stable coins return. You can do with them what you will. You can always see that your Bitcoin's there. So they're not doing anything. As long as you're paying back that loan, you're going to get your Bitcoin back. It's a beautiful thing. Again, no KYC, no AML. You can access a global liquidity market anonymously. It's a beautiful thing. Leveraging Bitcoin's native multi-sig properties. Also, if you have stable coins laying around, you want to get some return on those, you can go on the other side of that order book. You can put your stable coins up for people that are looking not to sell their Bitcoin and need some USD liquidity in the form of stable coins. You get a little yield on that. Go to lend.hodlhodl.com. That's lend.hodlhodl.com. Check all this out. This trip was also brought to you by our good friends at Compass Mining. Compass Mining is really trying to simplify the game, especially for individuals who want to get into Bitcoin mining, but they don't want to pay the high electricity costs that come with their homes. You don't want to be paying 14, 20 cents a kilowatt hour. It's pretty high in residential areas, in the U.S. at least. But still, some people have to pay them. You don't want to pay 10 cents. You don't want to pay 12 cents. Compass Mining is lining up deals with co-hosting facilities with competitive power rates. And they're also helping you acquire miners. So you go to compassmining.io. You pick a miner. You purchase a miner. Compass acquires that miner for you. Then you go, you pick a hosting facility. You decide which one you like. They're going to put up the power cost. You pick a hosting facility. You buy a miner. Compass gets it for you. They plug it in. Your miner starts producing hashes. Those hashes get sent to a mining pool, and you get paid out for the commensurate amount of hash rate that you're providing that mining pool, and you get paid out in sats. It's a beautiful thing to your wallet. Compass Mining is making this as easy as possible for individuals. So if you want to check it out, go to compassmining.io. That's compassmining.io. Check it out. Last but not least, while you're mining, if you have the ability to pick a certain mining model that is compatible with Brains OS Plus firmware, you should be like, hey, can we make sure we're running Brains on this? The Compass Mining team, Brains, is also helping sponsor this podcast. They're good friends. They're good Bitcoiners. They're good software engineers. They're all around good people. Right? Brains has been around for quite a while. They are the team behind Slush Pool, which is the oldest mining pool in the Bitcoin world. It's the first ever mining pool. Pretty beautiful thing. They've been Bitcoiners, staunch Bitcoiners, protecting Bitcoin, stewarding Bitcoin, trying to provide tools and products to Bitcoiners to make sure that they can stack more sats. That is materialized in their Brains OS Plus firmware, which I've already mentioned. That's available for S9, S17, and T17 models right now, and they're working on WhatsMiner models as well. And basically what their firmware does, you download it, and it helps you stack more sats. I'll just make it as simple as that. On top of that, they are working on Stratum V2, which is a decentralized mining pool protocol. They're working on that in conjunction with Matt Corallo and Square Crypto. Again, let's name some of the things they've done in the past. They discovered Amplead and found a way to provide their Brains OS Plus firmware to the market so that they had an option that wasn't the manufacturer firmware. And at the time, Bitmain was backdooring their firmware. So that was very good for Bitcoiners. They enabled overt ASIC boost for their miners, for their firmware, so that they can, again, stack more sats. They're doing beautiful things. They're creating good content too, educational content around mining. They've got mining profitability tools. So go to Brains, that's BRAINS.com. Check all this out. Beautiful team, beautiful world, beautiful time to be alive, freaks. Bullish on Bitcoiners, bullish on life. You got to be optimistic. Things seem a little crazy right now. We're getting like inflation. It's coming. It's here. People are freaking out. Do I get the vaccine? Do I wear my mask? Do I tell my family that stuff sort of creeps me out a little bit? I know some of you freaks are having these questions right now. I am too. You know what? We have Bitcoin. Focus on Bitcoin. Start building. That's the beauty of Bitcoin. It's an open source protocol that anybody can contribute to and start building around, start building on, start making it a shelling point of society. We're doing it, freaks. It's happening. It's happening. It's a beautiful thing. It's going to keep happening. Love all y'all. Enjoy this rip. Tiki.
You've had a dynamic where money's become freer than free.
If you talk about a Fed just gone nuts, all the central banks going nuts.
So it's all acting like safe haven.
I believe that in a world where central bankers are tripping over themselves to devalue their currency, Bitcoin wins. In the world of fiat currencies, Bitcoin is the victor.
I mean, that's part of the bull case for Bitcoin.
If you're not paying attention, you probably should be.
What's up, boys?
What's up? Nothing much with me. It's good to have you guys in town.
What's it feel like everybody invading Austin?
It's good. I mean, I've lived here for a year and now I'm an OG, which is funny. But yeah, it's good to have everyone here, especially this week. We have 175 RSVPs for the meetup.
For the Bit Devs meetup? I was talking to Will Cole yesterday. He doesn't think we're going to be able to fit everybody in the office.
Yeah, in our group chat for the meetup, Phil Geiger said we have vertical space if we need to, so go get on shoulders or something.
It's going to be a lesson in scaling.
I mean, Marty, from your time in New York, what was the biggest Bit Devs turnout you saw up there? Because I mean, this has got to be pushing. I mean, if of course, I'm sure not everybody will show up, but what's the biggest Bit Devs New York you saw?
During consensus weeks, they would get pretty packed. During bull runs, they get pretty packed. I think 200 at one point.
You guys have like a lecture hall, so.
Yeah, at NYU. It's beautiful to see what's going on down here. I love it. I've been here since Monday. Chris literally just flew in from Chicago, I'm assuming.
Yeah, flew in from Chicago, landed at 11:30 and podcasting by 1:30. So, and got a meal in between there, so some efficiency in there.
What'd you eat?
Got some enchiladas, brisket enchiladas, which were phenomenal. It was absolutely amazing.
Yeah, I met Ryan Gentry at the taco joint yesterday, and went back for more today. That's what I had for lunch. Some taco joint. Good tacos down here. I'm loving Austin. Am I going to move down here, Ben? Should I move down here?
Hell fucking yeah, you should. Everyone should. I've been trying to convince this guy to move down here too. Every week he's like, man, I'm jealous. You guys can go outside.
Yeah. It's two different worlds in America right now. That's for sure. I guess maybe it was like this beforehand, but it seems even more apparent now when you come to places like Austin. From places like Chicago. Chicago is starting to open up a little bit more, but you guys are still light years ahead of.
Yeah. How's the COVID cowboy doing?
COVID cowboy
in Chicago?
Oh, he got canceled. If we're talking about the same, are you talking about the?
Talking to the mic a little closer.
Oh, he got canceled. If you're talking about the guy that was like riding horses like through the streets.
Yeah, didn't he mess up the horses?
Yeah, it's a very sad thing. He didn't understand you need to put horseshoes on a horse, otherwise their hooves will be worn down running on hard surfaces like concrete. And he was riding them all over. He was like riding them down an interstate at one point, like maybe fleeing from the cops or something like that. And then of course in her wisdom, I think Lori Lightfoot deputized him to be like the COVID ambassador for Chicago, and then he gets arrested 3 months later for inhumane treatment of animals. So
yeah, they had to euthanize the horse, didn't they?
Yeah, I don't know about that. I thought I heard it went to the farm, but sometimes that's a euphemism. So
yeah, I went to the farm in heaven.
Yeah,
rest in peace.
But yeah, I don't know. Chicago is Chicago. It has a lot of other big city problems, and we'll see as Austin grows if which way it goes. Is it going to embrace that more kind of the statewide ethos in Texas, or is the people that are moving here going to affect the culture in such a way that it just becomes San Francisco in Central?
Yeah, like I feel like I need to move to Texas to help save Texas,
right,
from the onslaught.
I like to think we have some resiliency, or if because a lot of people you're leaving SF, it's like, okay, I'm going to Austin, Denver, or like Seattle, Portland, and a lot of people they hear like Austin, Texas, like, oh, Texas, though, like, ooh, that's where all those cowboys are. I don't want to live there. So we kind of have that resiliency where people don't want to come here. But, I mean, you can still see a ton of blue-haired chicks here. So we'll see.
So, just, again, the people listening, I've been here for 2 hours. I did see one cowboy hat, cowboy boots. He looked like a honest-to-God cowboy. So I was encouraged by that. Me and my girlfriend were taking bets how long it was going to take to see somebody like that. So that was refreshing. Was
it at the airport?
No, it was actually just walking up and down. I think it was like 5th Street, maybe. I don't know the streets, but yeah.
Yeah, we got in Monday afternoon at noon. Didn't get our Airbnb till 3, so we had to go to lunch downtown. And I saw like the most Texas dude ever. He was like a lawyer wearing suspenders, and he had one of those beards that was like curling up on the sides, the mustache that curled up. I was like, oh, sir, I declare.
That's awesome.
The nice thing about Austin, I mean, I hope this is like, what I would plan for it in my mind is like it becomes a little bit more, allows the tech industry to say have like a different sort of culture associated with it than like the dominant East Coast, West Coast, super liberal like culture that you see throughout basically the entire tech industry. And like Bitcoin's like actually interesting, I think, in this regard, because there is some differing viewpoints within the community itself, whereas I feel like in the broader tech ecosystem, really it's like a monoculture of like kind of like West Coast values, I guess you'd say.
Yeah, I mean, we had a prime example of this morning on Twitter. I mean, obviously the Bitcoin carnivores are a huge demographic within the Bitcoin space, but the vegans love Bitcoin as well. The official vegan account was shitposting and responding to Chris Dixon about the Coinbase IPO.
Yeah, I saw that. They're like woke. They're like, fuck Coinbase, use River and Swan. I was like, oh, hell yeah.
I know there is like vegan, like I think Matt Corallo at one point was a vegan.
I think he still is.
Yeah, is he?
Yeah,
there's a fair amount of Bitcoin vegans.
Whenever I get lunch at Matt, we have to pick a vegan restaurant.
Yeah. With like the cultural stuff, it's like, again, I don't want to like shove, other differing views out, but it's just like, let's have both sides of the spectrum instead of like just being totally dominated by like these, like, again, like West Coast kind of San Francisco values that you see.
Yeah, completely detached from reality in Middle America. They hate Middle America.
They do. I mean, I actually do kind of believe that as someone that has traveled frequently to the coast from Middle America. You always get, it's like same thing as Southern people encounter, frankly, is like, you know, if somebody has like a Southern draw, usually you kind of have those stereotypes come up in your mind. It's like dumb, stupid Southerner. And like you kind of get those condescending views, or maybe it's all in your head. I don't know. Like, I guess you can argue that too, but yeah, it's good that there's differing viewpoints within a industry as important as Bitcoin, and hopefully we can, you know, get that out into the rest of the tech industry.
I agree. Nah, somebody who's lived in the Northeast, in the Midwest, and the southern part of the country. It's beautiful how there's different types of people in different parts of the country. That's what makes us strong. It's I hope Texas doesn't get bastardized by San Francisco moving into Austin.
I don't think it will. Like, Texas has a ton of other cities, and Austin's just one. Still got Dallas and Houston to keep us sane. So,
and I guess if you do, like, you don't have the Texas viewpoint, you can always move to Portland.
Right, yeah.
Go to Portland instead.
Are they trying to throw the cops out in Portland?
I'm not there, so not my problem as far as I'm concerned.
Well, that was fun culture talk to start off this rep. Boys, this is my first in-person interview. I haven't even done one with Matt since BitBlock Boom, I don't think. This is the first oh, wait, no, we did Arbed Out.
Yeah, that's gonna...
around Christmas. So it's been about since Christmas since we did
4 months.
An in-person interview. Feels good, feels right. Thanks for coming to the Airbnb, by the way.
No problem.
Anytime.
Thanks for coming again, like, Chris was on the flight. He was like, I DM'd him literally as you were sitting down, I imagine.
Yeah, no, I was on they were pushing the plane back, and I was again, like, today is the Coinbase IPO day for some reference, and I was like looking through Twitter, being like, okay, what's going on with that, and trying to see what's happening, and then I saw your DM pop up. I'm like, heck, why not if my girlfriend doesn't kill me, of course, so.
Yeah, Marty's DM to me was, hopefully Chris buys Wi-Fi on the plane so we can figure out a time.
Chris did not buy Wi-Fi on the plane.
No, I mean, planes are great hacking times. It's like you're just away from everybody. You got an outlet, you got your laptop, and was working on some DLC infrastructure stuff behind the scenes. So,
well, thank you for providing a perfect segue into the DLC conversation. What were you hacking on particularly?
Yeah, so for those that don't know, I think it's been since January or maybe December since I've been on anyway. We've released a product called the Oracle Explorer. It's a way to find oracles for your DLCs. For those that don't remember, DLC stands for discrete log contract. It's a way to do bets on Bitcoin, derivatives on Bitcoin, any sort of speculation you want to do. You can do it with DLCs. However, you do need an oracle to attest to the thing that you want to speculate on. So this can be a football game, basketball game, etc. And so we've released a product called the Oracle Explorer at oracle.suredbits.com to aggregate these oracles so people can find existing ones for their bets. The next step in this kind of infrastructure is allowing people to find popular contracts that other users are doing on the Bitcoin blockchain and allow them to, customize it in just a little, way, such as maybe you want to put more money in the contract or less Bitcoin in the contract, and then, keep all the rest of the parameters. And this is kind of coming out of something that's in the contemporary news, I guess, between American HODL and Peter McCormick, and maybe Ben wants to.
Ben's the Oracle
on that.
Or are you the Oracle, or are you? No, you're not the Oracle, but you're setting up the contract, aren't you?
Yeah, I think Chris or Suredbits will be the Oracle,
yeah.
But yeah, that asshole made a bet without us knowing, and was like, "You guys are gonna need something Peter McCormick ready," and we're like, "Well, shit." So yeah, for the last few days, I've been grinding on the GUI, trying to make it pretty, and we've made some good progress. I sent Chris a video of what I got so far, and it's pretty decent now.
But what's the bet itself?
Oh, the bet is if Bitcoin hits 300K by end of year, or by the ball drop in New York, and for a Bitcoin, and if it does, HODL gets it. If it doesn't, Peter McCormick gets it.
So they're locking up 100 million sats, and winner gets all.
Yep.
Yeah.
$300,000 HODL wins. Less than that, Peter wins.
And it just has to like wick up. Like it doesn't matter the day of. It's just like if it does at all during the year.
Oh, okay. So it's an intraday wick.
Yeah.
No daily close or anything like that.
Yeah, you can get
Just at any point in time, if it breaks $300,000 on Coinbase, American HODL wins. And if by January 1st, 2022, the Coinbase Bitcoin price did not exceed $300,000, Peter McCormick would win this one Bitcoin. And kind of, circling back to the tooling aspect of this is if other people wanted to enter into this bet, say not just Peter and American HODL, but maybe me and Ben or other Twitter users that are following Peter and American HODL, we're working on infrastructure to make that easy to do, at least on the contract front, so you can like clone their contract almost like you clone a GitHub repo or copy it. And, maybe you don't want to bet half a Bitcoin on this or a whole Bitcoin on this, but maybe you just want to do 50,000 sats or 100,000 sats and, do a little bit smaller of a bet, but you can say, I'm in it with you, American HODL. I think Bitcoin's going over 300K, or the inverse of that is, I like Peter McCormick and his lavish lifestyle and think he's gonna, win this bet. So, just trying to facilitate that is the tooling we've been working on.
I don't know if this is uncouth to ask you guys since you're playing the Oracle, but like, whose side are you on?
I think HODL's gonna win.
You do?
By a long shot, but
you think we're gonna hit 300K this year?
We're gonna hit 500K at the end of the year, and then Parker's gonna buy me a steak. So that's my prediction.
Well, like some other like tooling we can possibly put around this stuff is like, the implied volatility that's needed to, get to 300K from the spot price we're at right now, which is like 62, 63, somewhere in there, and put live odds on there. It'd be really fun to make this as social as possible with the tooling, and allow people to share and follow the bet. And that's something in the DLC ecosystem. Now that we're getting a little bit more on more solid foundations on the protocol level, we can start building a little bit higher in the stack and feel more confident that the ground isn't going to change out from underneath of us.
When you say protocol level, are you talking about the Bitcoin protocol or the software that you guys are building particularly?
Like the DLC protocol. Like we're kind of at the point where like Lightning was in like early 2018, where like there's like 4 nodes on the network, and like there's just kind of a Lightning network, but it's all command lines and not easy to use. And ideally, we'd like to get to like where Lightning is today, where you can download Breeze on your phone and just scan a QR code and go. But yeah, we're getting like most of the initial protocols like mostly done, or at least we know what we need to fix, which will probably be done probably like by summer or like end of summer, hopefully. I don't know.
Yeah, I mean, one of the big pieces of work that just got in is something that Jesse Posner and Lloyd Fournier have been working on for quite some time, which is these things called ECDSA adapter signatures. And technical buzzword out there for everybody, but this is the cryptographic tool we are using to power DLCs. In previous iterations, we were kind of, we had something working. It was good enough for proof of concepts and demos, but we would prefer if, some lower level C and cryptography experts vetted this stuff and made sure that it makes sense. And so Jesse Posner did a lot of legwork on that. And just recently, within the last week or two, that actually got merged into the SecP 256K1 ZKP library, and is now like maintained like all the other features in SecP. So that was a big milestone for us. Now, for all the library developers out there or wallet developers out there, they can hook in and get access to these cryptographic tools that they need to be able to support DLCs in their own wallets, rather than having to use the Suredbits wallet or the Crypto Garage wallet. We really want to hopefully get DLCs supported in every wallet, so that you don't have to have 15 different wallets where one supports with this one feature, you want another one supports another feature, try and consolidate that stuff. So hopefully that increases adoption of discrete log contracts as well.
I'm very excited about all this. Like you just mentioned, the ECDSA adapter signatures, how much developer attention has been dedicated to this recently. Is it growing? I guess that's the question I'm trying to make. Like, you guys seeing people come help you build this out?
There's a lot. Like Lloyd wrote the paper on it when like 2019.
Yeah, somewhere in there.
Yeah, and they made like an initial like just proof of concept like branch that we were working on for like the last while, and then they officially like started working on like the current spec that just got merged probably for the last like 6 to 8 months. And yeah, now like that PR, like it got reviewed by like Andrew Polsha, like Real or Random, like Jonas and Nick, like tons of like really good cryptographers in the Bitcoin space. So it's really cool. Now we have like this really well fleshed out, highly reviewed thing done, and so now we can actually use this and get other people to start using it, and it's really nice to see.
Yeah. So what happens if Taproot gets activated?
Then we get to do this all over again and start using Schnorr signatures instead.
That's like you say, you can't prepare for that, or it doesn't.
So like the ECDSA adapter signatures were needed because Bitcoin didn't support Taproot, and trying to build things around when a consensus feature in Bitcoin is going to activate is risky business, to say the least. Going back to what Ben was mentioning with the Lightning teams in the 2017-2018 era, they needed SegWit. So they were predicating business models around, okay, when is this SegWit feature activated? And we all know how dramatic that was. So really we were looking for, can we do this without having to wait for Taproot and Schnorr to get activated? And ECDSA adapter signatures were a venue to do that. So now, I mean, I guess Ben is following the Taproot stuff a lot closer than I am, but we aren't like hard blocked on Taproot activation to keep DLCs moving forward. And also other blockchains that may not have Schnorr or Taproot for whatever reason, they can use ECDSA adapter signatures if they want on their respective chains. So it's one of those things that it just is really tough to update the Bitcoin protocol, and that's not a knock, but it just is. And guessing when that's going to be is not a very fun game.
Yeah, and even if and when it does get activated, it's going to take time for all that stuff to get implemented in wallets and stuff like that, correct?
Yeah, definitely. Like, if Taproot was activated tomorrow, like we'd have to spec all the new stuff out to use Taproot, and then write that code, verify it, and get it deployed. And probably a lot of wallets can't even send the Taproot like once it's activated. So there'll be a lot of time before we can actually start using it.
Yeah. All right, Taproot, Coinflip. You're a Coinflip fan. I've been going back and forth. I slept on it, didn't like it. Then we did Rabbit Hole Recap last week, and you were in the comments saying the Coinflip's good.
Yeah, I think a lot of it's like, honestly, it has a terrible headline like $1 trillion network decides consensus decision over a coin flip.
Yeah, so break it down for the freaks out there who aren't aware of the whole situation.
So like Taproot activation it's been a journey this week or this year. So we originally started out with BIP8 versus BIP9, and then most people are like, let's use BIP8, which is basically just using block height versus like real world time that's determined when we're starting our activation period. And then we decided, do we want to lock in on timeout, true or false? So do we want to force a UASF at the end of this thing? And if you don't know, that caused a huge schism in the entire dev community where it was like split maybe like 50-50, sometimes 75-25, and like basically just everyone arguing, and then saying like, you're going to cause a chain split. No, you're going to cause a chain split. And it, lots of emotions going on and stuff. So then someone proposed Speedy Trial, which is a different way where just like a 3-month activation, and so it'll fail quickly. We can, then we can figure out if it doesn't work, then we can figure out something else. But more than likely, Taproot's going to activate really quickly. Like everyone supports Taproot. Most soft forks besides SegWit activated in the first 3 months anyway. So more than likely that will work. And then the final part of Speedy Trial was figuring out, do we want to use block height or real world time to determine our activation period, and then more bike shedding again, where everyone's arguing the super edge cases that are possible for these things. And basically, I think Jamie Rubin proposed it. He was like, we're all just bike shedding. Why don't we just flip a coin? Like honestly, like we did like a poll, who would be okay with either, and like 90% of people like, yeah, I'm fine with either. It's just we're bike shedding here. So we did a coin flip. Real world time or medium time passed won. So now Andrew Chow closed his pull request for block height, and it looks like Speedy Trial is like happening in like 2 weeks now.
Boss.
So the proposed activation start time is April 24th, and then so the following difficulty adjustment period would be the beginning of activation. So let's see it in 2 weeks or something.
Let's go.
So yeah, it's happening now. Like we finally did it seems.
Well, let's talk about the actual coin flip too, because I thought it was really cool. You used the Bitcoin protocol to basically initiate a coin flip.
Yeah, there was like I forget what block height it was, but some block, it was like, in 20 blocks, we're gonna, to see if the last bit is 0, 1. If it's 0, we use, real world time. If it's 1, we use block height, and, it was 0. So we did it. And like, it was nice. We had like a basically fair way to do it. Maybe the miner threw away a block because they wanted block height instead of, but I don't think that happened.
Yeah. What a crazy world. Is this a bad precedent to set?
I was arguing with Shinobi about this. He thinks it's a terrible precedent to set, but I don't know. I think
what's his argument? If you
basically we for $1 trillion network, we shouldn't decide protocol decisions on coin flips, which is probably a good idea. But I think the way I see it, Speedy Trial was a way to stop bike shedding, and then by and large this was a way to just stop people bike shedding from each other. So we're just trying to get this thing through. Taproot is by and large everyone agrees that we need it, or not necessarily need it, but there's no downsides, and this thing is a humongous benefit to the network. So why not activate it? And if we're just gonna argue over how to activate it for these super niche cases that 99.99% chance won't happen, let's just get this thing out there because people want to use it.
What were some of the niche cases that people were bringing up?
Well, it's so since we're using if you use time that has some weird things where since the miner sets their own block time in their block, they could do some weird thing where they change it and then reorg themselves to move it in the past or into the future, and then that could cause issues where you thought it was going to activate and now it's going to activate 2 weeks later instead, and someone broadcasts a Taproot transaction, so now their funds get stolen or something. And
to maybe make a parallel to DLCs here is Bitcoin has no notion of time. Time is something that we humans understand, and we have a clock on the wall or whatever. But the Bitcoin protocol itself has no idea if it's June 1st or December 25th. We have to build in rules to the protocol that make sure we have atomically incrementing time over time, if that makes sense. And so there's this whole BIP that I think Mark Friedenbach wrote to make sure that this is the case, so that applications like time locks, for instance, which we are familiar with, actually work. And generally, when I'm on the block height side of things, but so when you're designing a protocol with wall clock time in mind, it's very hard to think okay, but the time on my wall is actually 6 p.m., but the Bitcoin protocol might think it's 5:30 p.m. or it might think it's 6:30 p.m., depending upon how miners are setting those timestamps in their blocks. So this is trusted input from miners every time a block is mined. Just like with discrete log contracts, you have an oracle that is attesting to something. It's a little bit more complex than that, but maybe for people out there that are newbies and just trying to understand this stuff, that maybe is a decent analogy.
Yeah, so the rules around the timestamp in the block, I think, is the average has to move forward, and most nodes will reject a block that's way too far forward. So they can they have a pretty big window where they can mess with things. So that's where the block height argument comes in, because that's kind of where Bitcoin determines its time is really block height. But the problem is it's terrible for test networks where Signet, there could be multiple different heights, and that it really doesn't work. And then for testnet, there's a bug in it where sometimes there'll be like 10,000 blocks in a day. So, we could say like, oh, it's going to start on April 1st, and then, we get 10,000 blocks in a day, and now we totally missed our window. So, there's different problems there.
Why does the testnet matter for this? Does it need to?
That's the argument. But like, that was my argument. I know like Luke Dash Jr. and a couple other people like said that like, we should pick the best thing for mainnet, and testnet should, assimilate to what mainnet does. But I know AJ Towns is saying, he was on the other side saying, these test networks are important. And, if I want to test something, I should be able to test it reliably on this network. So we make sure we're doing the correct thing on mainnet.
Mm-hmm. All right. I don't care about testnet at all, but I'm not a developer, so my opinion probably doesn't matter in those regards. I have something I wanted to add to that.
Well, I think at the end of the day, Ben's right. Is just pick something and let's keep this thing moving forward. Like I think it's a little hyperbolic to say that that seems like it'd be a New York Times headline. It's like $1 trillion Bitcoin network, solves problems with coin flips or something like that. And I think it's
like by and large, they're both like perfectly fine. And we had to pick one, and this was the best way to break the standstill, I think. So I think I'm glad it happened. Now, like I said, in the next 2 weeks, this thing's actually happening. So, if we didn't do this, we might, be like, yeah, maybe in 3 more months, we might have it. But now we have like a real timeline that's happening.
Yeah. And so I'm pro Coinflip again. I remember what I wanted to say, even in that edge sort of scenario that you described at the miner, like reorging stuff, like the probabilistic nature of getting a block too would make that like a low probability event, right? Because you can't guarantee that a miner's going to mine 2 blocks in a row.
Yeah, it's pretty, like it'd be a heart attack to pull off, and there's not a huge incentive to do it. Like no one's doing Taproot transactions the day it comes out. So like,
unless you're a god like Peter Wolla.
Yeah, like it's a super, super niche thing to do. So I don't see a reason to like we should care about these things, but like it's fine to have that very small
don't let the perfect be the enemy of the good, right?
Yeah,
good enough.
Yeah, exactly. Like Bitcoin's not a perfect protocol, but it's the best we got, so let's just use it.
God, it's so good right now. All-time high, boys.
Yeah, I mean it's so as someone, I guess I've been through 2 or 3 of these now. It blows my mind every time. It's like, God, I've seen this before, but it's still going back to that American HODL Peter McCormick bet. It's like, you never know with Bitcoin. I mean, if there's one asset that can do it, it's Bitcoin. And especially with the kind of momentum and steam we have behind us now with the Coinbase IPO, seems like everybody and their mother of corporations is like dabbling with Bitcoin. It's like, I mean, Marty, like for people from 5 years ago, this would be like the best case scenario I think I could like possibly imagine. Maybe there is a few more, but it's pretty damn good. Like with what things are right now, in my opinion, anyway.
Yeah, I was on Cedric Youngelman's podcast yesterday, the Bitcoin Matrix podcast, and he asked me like, "Are you stressed out about the future of Bitcoin at all? Like, how does this compare to like bull markets of years past?" I was like, "I'm not stressed out at all. Like, I've never been more confident." Like, remember 2015, 2016, that bear market? Like, people legitimately thought Bitcoin was going to die. Like, I think we've hit a tipping point, particularly in the last 12 months, where there's no turning back.
Try starting like a Bitcoin company in those times. It was not fun. Blockchain is where it was at. Not Bitcoin, though. But that's kind of changed, I guess. So
yeah, well, that's a debate I've been having. I had it last night with Alex Gladstein and Jimmy Song. Like, it's like, is this time different? I know I'm going to, like, timestamp 30 minutes, 31 seconds, plus the ads of the intro to this podcast recorded on April 14th, 2021. Marty said this time is different, and he was wrong. But is this time different? It's just the culturally, the acceptance of Bitcoin, like the amount of, and so that's the conversation we got into last night. Like, just the price goes to such a level. That's what Jimmy was saying, and like how these crashes happen, that there's just not enough inflow to basically eat up the new supply of Bitcoin coming on the market to hold up the price at those levels. But it's like,
I think like this time, I think what this chip shortage might be like influential in that though, because like now, like right now, miners are net buyers of Bitcoin, and like difficulty is not going to track price. Like it hasn't at all so far, and it doesn't look like it will. So we like if we hit like 500K, like it's not like miners are selling, like $1 million worth of Bitcoin every block. It's like the difficulty might only go up another like 10-20% by then, and they could just be like pocketing all this cash, and there's like not that new supply isn't diluting us as much.
Well, that was another part of Jimmy's explanation of why we probably will have another big crash, is because the miners, particularly the big miners, will try to squeeze out the smaller miners by pushing the price lower and try to drop their profitability to unprofitability, and then seize up some of the market of the mining share at least, which is an interesting theory. But again, like it's hard to imagine like all these big players selling Bitcoin, all these retail investors selling, like the combination of like the acceptance in the mainstream and what's going on in our political and monetary system. Like it seems, I don't know, maybe I'm biased because I hate it so much, and I hope this to be true, but it seems like people are losing confidence in the political monetary system rather quickly.
I think it's definitely true. Like, I mean, even just like Dogecoin being normalized kind of like makes Bitcoin normal. And now like, if you tell like a random person on the street, like, oh yeah, I work in Bitcoin, they'd be like, oh cool. It's not like, what is that? Are you a crazy person? Like, why
are you financing terrorists?
Yeah, exactly. And now it's like, oh, that thing that Elon does. And, oh, I heard about, that thing went up. Good job. And, it's kind of cool where it's like, it's crossed the Overton window completely.
Well, and like going back to culture stuff, it's like Bitcoin has that weird cultural aspect to it. It's like kind of counterculture, kind of cool. At least what I tell myself again. So maybe it's just me projecting, but I do think it has that countercultural like aspect to it that can be really attractive to people too. It's like outside the system and all this stuff. I want to see like the Hollywood industry get behind like telling all the amazing stories that's happened over the last 10 years in Bitcoin and get away from NFTs and like trying to sell those things. But I mean, there's so many good stories, like I think in the Bitcoin or even the wider cryptocurrency industry that can really also just help raise its profile. Like you said, Elon Musk, like, him just tweeting about Bitcoin just legitimizes it so much, I think, and Tesla buying $1.5 billion worth of Bitcoin, like that is, I mean, again, like going back 5 years ago, it's like, yeah, if you told me Tesla's going to buy $1.5 billion of Bitcoin, I'd be like, well, first off, Tesla's not going to be in business in 5 years. And they sure as hell aren't going to buy $1.5 billion of Bitcoin because Bitcoin's worth $1.5 billion. I think all of Bitcoin is worth $1.5 billion. And just like going back to the 2015 days, and just a little anecdote back to Coinbase, like Coinbase raised, I think, $75 or $100 million from Goldman in 2015. And again, Bitcoin was worth $1 or $2 billion, I think, when they raised that money. And now Coinbase today is IPOing for roughly 100 million, maybe $200 million. And
billion.
Oh yeah, sorry, billion. Excuse me. And all of Bitcoin is worth $1 trillion. So you see, like this kind of ratio is the same between Coinbase's fundraise back in 2015 and their IPO today and the Bitcoin market cap. So I don't know what that means, if there's any interesting information to glean off of that, but it's funny anecdotes anyway.
Yeah. And that's another thing I think people severely discount, particularly like people who bash Lightning and Bitcoin scaling and second layers and stuff like that. Number go up really provides utility to these second layers and Bitcoin in general, right? Like that, like
it's super helpful. Like my Lightning wallet on my phone is just like, oh, now that it has 5x as much money on it, and I don't need to worry about channel balancing as much anymore because it's everything's just worth more. So I can send $20 a lot easier.
Right. Imagine if that Eric Wall, Ryan Gentry bet happened at $100,000. Like with that, I mean, he dragged it out. Eric Wall did and made it very gruesome for the Lightning Network, I guess is a good word to say. But sending $1,000 would be significantly easier. You're just sending sats, right?
Yeah.
That's the other knock. Like people not understanding how to I don't want to say value Lightning, but like basically determine whether or not it's being successful. Like they look at just the pure amount of liquidity locked in channels, where you can like they don't understand that like it's beautiful that you have sort of a static amount, at least in public channels, and people are just getting utility out of that static amount of Bitcoin on the network. Like I set my channels up for the TFTC node for our store on our website 2 years ago, and I haven't touched a thing, and it just works. We're able to receive, and like I'll top up our ads on Bitcoin Bounty Hunt like every once in a while. That happens automatically. Yeah, it's like when the number goes up, like Lightning, I think is gonna get really interesting.
And we're also so early on Lightning. Like this thing's like 3 years old. Like when Bitcoin was 3 years old, people were writing individual private keys on pieces of paper. Like, now we have like BIP9 seeds and like all this fancy, seedless stuff and multi-sig. Like, like 10 years down the road, Lightning's going to be like super, super seamless and a lot better to use. It's just, we're so early on this protocol, and there's still so much stuff we have planned, like, like L2 and, PTLCs, all these fancy stuff that's coming. It's just, we're so early on Lightning.
Yeah. How early are we on DLCs?
Oh, so much earlier.
2017 Lightning or 2010 Bitcoin, I guess, is probably what we'd say. DLCs are interesting because, if anything, people love to do in crypto is speculate, and that gives people the tools to do that for the stupid Twitter bets like Peter McCormick, American HODL, or whoever your friendly Twitter troll is. You can at least get them to maybe put their money where their mouth is in the future, but we'll see.
Even you betting on the election.
Yeah, I mean, I bet on the election, I guess. I bet on Joe Biden winning, and I got a 0.4 Bitcoin out of that. So I guess Joe Biden did something for me, that's for sure.
40 million sats.
40 million sats. Sorry.
Well, that's another thing to take into consideration. Like we were talking about Tesla. Like I think it's cool that they bought $1.5 billion, but I think it's even cooler that their engineering team was focused on patching a bug on BTC Pay Server. Like, is there going to be like a Cambrian explosion of engineering talent just from companies that are getting financially invested in this asset, that are looking at the protocol and contributing to different areas of the ecosystem, if you will?
I mean, I think so. I mean, again, as they get skin in the game, they have to. You don't want to be the Tesla engineer that has to report to Elon Musk and say you lost $1.5 billion of Bitcoin. That's for sure. So, I mean, yeah, as all these institutions get skin in the game, that's going to be the case. And that's great. I mean, that's what we all want to see. It seems like, there's a lot of funding out there for developers these days, and that's going to, benefit all of us later on down the line with improved tooling, improved protocols, better security on all this stuff. So that's really an underappreciated part of the industry, I think, is like the amount of security that needs to go into, say, secure $1.5 billion of Bitcoin, or work on like Coinbase custody team, or any of these big exchanges custody teams. Like, it's no joke. You cannot do things quickly, or best even to not change things at all, because assuming that the thing you have works, changing anything introduces risk, and risk is really bad in those setups.
Yeah. Again, I think this time is different, freaks. I think it is. Like, a cultural tipping point. Like, it's just accepted. Like, you have Jim Cramer being demanding to be paid in Bitcoin. He's actively, I mean, not to like, I put a lot of
Which way was the wind blowing today? That's what Jim Cramer will say.
Yeah, exactly.
I guess he's a
media
pundit.
But the normies take what Jim says, and they're like, oh, Bitcoin's okay. This is supplanting gold. Like, gold, it's demonetizing gold in real time.
We printed like $10 trillion, and gold is down since. Like, that's pretty hilarious.
It's pretty damning.
Yeah.
So has there been any takes outside of the Bitcoin take of why gold is performing so poor? I mean, like, is there any other arguments to why gold has sucked recently, rather than just Bitcoin is eating its lunch?
I would think the gold buds will say, it's manipulated, paper gold markets, blah, blah, blah.
But okay.
They would say that. And
forever.
Yeah.
Your Keynesian MMTer would probably say, well, inflation isn't the the CPI inflation levels and where the gold bugs were saying it was. So investors are looking at that and they're not putting their money in gold. Or I would imagine that's one of the arguments that they would put out there, even though it's blatantly false. There's inflation right now. Have you filled your gas tank recently?
It's insane. Or bought wood.
Right.
Lumber. Yeah, I mean, going to the farming stuff is even commodity prices are up, and corn, soybeans,
wheat.
Just
Even my favorite barbecue place here, the prices have gone up $6 per pound for brisket since I moved here.
What?
Yeah, it was used to be $20.99. Now it's $26.99.
wow.
That's 30, almost 30%. It's like,
Yeah, it's really good brisket. It's still worth it, but it's like, I don't want to spend all this money.
damn. So that's the other thing, right? Like this time is like, are we in the beginning of a hyperinflationary event? That's what we were talking about last night too. Like, is it already here? Like, what are we going to be saying in 12 months? Like, how crazy are things going to get?
I mean, we got Bitcoin, so we'll be happy either way. But I don't know. I hope it doesn't get too bad here because a lot of bad stuff can happen.
I don't want to see that. Like, even if it benefits me financially, that's it's just so bad for the citizens of a government to go through that. And there's plenty of examples in the world for that, and hopefully we aren't at that extreme in the United States.
I agree with everything you gentlemen are saying, but what if we are? I hope not too, but
Get out to rural Texas, go make some friends with whoever has guns out there and cattle, and
3D print your own guns.
3D print your own guns. There you go.
Well, how was the Guns and Bitcoin conference?
It was a ton of fun. I shot 1 million guns and got really sunburnt, but I learned so much. Like getting into Bitcoin, like you first get into like, oh, it's this fancy alt currency basically, and then you start reading, you're like, oh, this thing is a humongously studied topic. It's so much deeper than you ever thought. I had that same experience with 3D printed guns this weekend, where I thought, I'm like, oh yeah, people just redesign and remake the part that Smith and Wesson makes, and then they put it into their gun. But no, these guys are trying to make guns 100% 3D printed, and they're making guns you just go to Lowe's, buy a couple pipes, go home, 3D print something, and now you have an entire gun that is accurate and shoots like a real gun. And it's crazy how much work they put into it, and how much they do to make it safe. And yeah, they have a lot of really cool stuff there.
Are these people terrorists, or are they just freedom-loving Americans?
Some of them seemed a little crazy, but they're all definitely freedom-loving people.
This is an honest podcast, everybody.
There's a bunch of crazy people in Bitcoin too, but at the end of the day, we're giving just people access to freedom technologies, which is, there shouldn't be anything wrong with that.
No.
I mean, with any new technology, you can kind of tell if you're on the right path of something. If there's at least if there's no crazy people, that's kind of boring. You need to whenever maybe, we move on from Bitcoin in 10 years, we don't want to work on it anymore. It's I'm going to wherever the crazies are. I at least some crazies, because they seem to find the unique, innovative ideas that are worth working on. And, they're crazy still, but that's something I want to see come into the world, and whatever tool set that I have, maybe I can help get that there, and, whatever the topic is, I guess. But, yeah.
I think we're still going to need the crazies in Bitcoin in 10 years. We got a long way to go, boys. A long way to go.
Oh, yeah, too long. 10, 15 years, and we're mostly done.
How do you view Suredbits? A company you're going to work with and on for the rest of your life?
Rest of your life's a long time. But yeah, for the next 10 years, 15 years, I think easily, whether we IPO or sell to another private company is yet to be seen, depending on what the discrete log contract ecosystem brings us. Something I've been thinking about a lot lately on that front is kind of institutional size derivatives between, big players like miners, and hedging whatever risks they want to hedge and retain some sort of custody. One question I wanted to ask you on this podcast, Marty, is what does non-custodial mean to you?
What does non-custodial mean to you? It means I know where you're taking this, right? I could have a key in the 203.
Yes.
But I don't
You definitely don't have custody.
That's not custody. That's just visibility.
Well, I think this is from the atomic finance discussion, right?
Yes.
Because so they called their product they're working on non-custodial, and it's you're setting up a DLC, and the Oracle can sign a message and execute your DLC, but it's like you're half like the counterparties are the only ones that are actually holding the keys on the blockchain, and they have this third-party Oracle that can create transactions they have otherwise valid to broadcast and essentially make their funds move. But it's like since say like me and Chris are in a bet, like we're the only ones that are actually holding these keys, so are we do we have full custody of it, or is that Oracle part of our custody?
It's like the Oracle can only move funds, but they can't pick where the funds are moved to. Well, the address that the funds are moved to.
They
more
can only
specifically.
sign a transaction.
They can only broadcast a signature that the people in the DLC can use to complete a transaction.
So like for like the American HODL, Peter McCormick bet, like say Chris is the Oracle, he can only sign a message to say that the price is up or below the 300K level. So you can only say like the funds will move to here or here. He can't just be like the funds are going to my address. Screw you too. So like he kind of has a say in where the funds go, but also he can broadcast that signature, and he say like the price does go over 300, and he signs that it doesn't. HODL and Peter McCormick could be like, well, Chris lied, let's just close it ourselves and give it to the right person.
Well, that was going to be my question, right? Like, what if the Oracle gives bad data? You can just
it's a multi-sig at the end of the day, so you can do whatever you want.
Gentleman's bet.
So it's like, I mean, it is an interesting semantic argument, I guess, is what it is at the end of the day, is like, what does non-custodial mean? Some people seem to think, from my understanding online, is like non-custodial means I have unilateral custody over my funds, which is custodial in my opinion. It's just I'm the custodian. Whereas non-custodial maybe means nobody unilaterally can pick where the funds go to after the contract is set up. That is at least where I'm at on this. Like, are you? I guess maybe another question is, what I'm saying is, it makes sense, and like, does the argument hold water? You think?
Yeah. No, I see what you're saying.
Because it's really tricky, I guess.
So you predetermine where the sats are going when you construct a transaction, right? You say, hey, if I win, send it to this address. If Peter wins, send it to his address. So you're basically just taking a hash of an outcome, or a hash from an Oracle that represents the outcome, and using that to direct the funds to the predetermined address. Is that... And yeah, so it's like Schrodinger's custody, right? Like nobody has custody until the hash is actually.
Well, maybe something more basic is like, if you're in a one-of-one, like pay to pub key output, do you guys agree with me that it's custodial, but you are the custodian?
I mean,
self-custody, right?
Yeah, I guess technically, but like generally people
I
consider
think that's very
non-custodial.
important, because I think a lot of people think that means non-custodial. But that's not really the case. It's you are the custodian.
Yeah, we're getting into a semantics argument. I think you're right. Right. There's some vernacular that needs to be fleshed out here. Like somebody is custodying, self-custody. So I think self-custody.
That's probably a better term
right.
Than using non-custodial in that context.
Yeah.
Like non-custodial, I think is in the context of multi-sig, like you were bringing up, Marty, is a great example of that. Is like, non-custodial really means nobody can unilaterally move funds from an output on the Bitcoin blockchain, including yourself. That's my thoughts on that anyway. I wanted to.
So would you say like me and you have a 2 or 3 multi-sig, I have 2, you have 1, you would say that's custodial then, because I'm the custodian?
I would say, yeah, you are the custodian in that case. Yes.
I can hear some freaks screaming.
Well,
then I guess you have to get to like, so it's all. I guess we have to add like centralized custodians, right? Like that would be the other term. That's the.
Well, like say if I
that's what most people think when you say custodial. It's
yes.
Third-party centralized custodian.
Yes. So like if I send my funds into Coinbase or whatever, like they're definitely the custodian. Like I don't think anybody's going to argue that Coinbase has unilateral control. like maybe with things like, I don't know if BitGo still offers like multi-sig solutions where like, they hold one key, or, there's various other companies that do it too. Yeah, that would be non-custodial in my mind, I guess.
Yeah, I think self-custody, that's probably the better word to say.
Yeah.
Because that means that, I can control the funds. Maybe that's what Atomic Finance should say. Like, does that make sense? Like, do you have self-custody of a DLC?
Well, I mean, I think what Atomic Finance was saying was accurate. It's non-custodial. But I think the people that were arguing with Atomic Finance think that non-custodial means that
Self-custody.
they are, yeah, exactly. So it's like, one of these very kind of stupid, like nuanced things that
It's not stupid though,
it,
right?
it needs to, like, we just need to make sure we're using our terms correctly, I guess.
Yeah.
In my opinion, like, I guess I'm shilling for discrete log contracts too, so maybe I'm jading people's views here, but everybody should think about it, I guess. That's what I've been thinking about a lot lately.
Think about it, freaks. I mean, it does make sense, right? So non-custodial would be like a DLC setup where nobody...
Multi-sig, where the keys are equally distributed so that nobody can unilaterally move funds. That's another example of non-custodial. Lightning is non-custodial.
Well,
I would have to think about
You
Lightning,
have like your
actually.
pre-signed like commitment transactions that you can broadcast though, right? To like close the channel.
Oh, so would Lightning be custodial where you are actually...
Self-custody.
Yeah, it would. Sorry, yeah, it would be self-custodied, but not non... Okay, this is a fun little argument, I guess, we're having. I'll have to think about this more, especially with Lightning. That's a fun one.
I guess it's like you could say...
Then HTLCs maybe themselves are non-custodial,
Yeah.
possibly.
But also like, you could say like your on-chain funds are self-custody, but like to send over Lightning, you still need cooperation between your counterparties of your
Yeah.
channel. So you could say that is non-custodial.
Okay.
But the actual closing of a channel is self-custodial.
Yeah.
Layers to this.
Layers to this.
A lot of nuance.
Yeah.
Don't
lot
at
of
me,
nuance.
at Ben, when people get angry at me for saying this.
Yeah, it's so fascinating. Back to DLCs though, like one blog post that Dow put out recently, I wrote about an event. It was really fascinating. Was your work on multiple oracles, and
Yeah.
So what did you guys do? Pierre, it was a price bet between you and Roman.
And me and Nadav did the bet, and we had Pierre, Bitfinex, and Chris as our oracles. And yeah, we bet on the price, and settled it with 2 of 3 oracles, which is really cool.
Yeah.
Yeah.
So break it down for the freaks.
Yeah, so just think about multi-sig. Traditional multi-sig setups, 2 of 3. You need 2 of the 3 signatories on the multi-sig to issue create and issue a valid Bitcoin transaction. The same concept we're bringing to DLCs with oracles. Instead of just having this one oracle that we just kind of argued about this custodial, non-custodial, self-custody stuff with, we don't want to have that single point of failure on the oracle front if we can avoid it, or at least give people the option or choice to use multiple oracles if they feel more comfortable, distributing trust amongst those oracles. So with the DLC demo that we did, we had 3 oracles, and it was required that 2 oracles agreed on what the Bitcoin price was to be able to move funds from the discrete log contracts. So do you remember what the price was? Around $57,000 or $54,000?
It was either 57 or 59,001. I remember ending with a 1, and we were like, "This is too it looks fake," because we have my round numbers. But yeah, it's hats off to Nadav. He's a freaking whiz kid on this stuff, and a lot of the really important stuff he's been doing lately was made this possible. Where, 'cause the nice thing that is these oracles don't have to coordinate or even know each other exist at all. All me and Nadav do is just need to get their signatures individually from them. So I think the Bitfinex price signed $1 different than the than Pierre's price, and your price you signed was a couple $100 different or something, or
I
a
think
couple dollars.
At least I thought it was $10 different, but
Yeah.
yeah.
And so we had 3 different prices, and our contract was still able to execute because like there's a lot of this fancy logic and compression stuff he's doing where, you know, if we made a contract for every single possible thing that all three oracles could sign, there'd be like 10 quadrillion different outcomes, and you know, it's signing 10 quadrillion
We need big blocks for that.
Yeah, and you know,
Just kidding.
You'd have to it'd take like, you know, days to sign, but during like all the fancy stuff we do in the back end, it turns to like 5,000 outcomes, and you know, it's a lot more easy to do, and it's really freaking cool what the stuff he designed.
And when you guys created that contract, you set minimums and maximums of like a standard deviation between the prices or something like that?
Yeah, there's like there's like two things you set. There's like a min fail and like a max fail. So you say like, you know, we want to cover all cases within like $128, say, and then, you know, up to $500 will allow some variance, but you know, it could fail if there's like a $300 difference, but you know, it might work if there's a $300 one, which is kind of how the math works out in the back end.
Yeah, so like a drastic example of this would be, you know, I say the Bitcoin price is $150,000. Bitfinex says it's $50,000, and then Pierre said it was $0. The DLC in that case would not be able to settle, and everybody would be refunded their initial collateral because it's outside of those accepted error bounds that was configured between the two contract participants. So, I mean, the key thing to remember with DLCs is like in the failure scenario where the oracle disappears, you know, you can always get your money back just by executing the refund clause. That's obviously not ideal depending on, you know, if you're winning or losing in the DLC, but it is a way to, you know, minimize like really bad outcomes like funds just being frozen forever.
Yeah, something cool that's going on too is like, you know, say like we have these 3 different prices. How do we pick which outcome to sign? Like, you know, if they're $100 difference, that might change between a couple sats between what we receive. And basically how it works is like we just like rank our oracles however we see fit. So I think we chose like Kraken as number 1, Bitfinex is number 2, and then you as number 3. And so like, so the Kraken price was like, you know, our stable price, and then we just made sure the other two were within the range, and then we executed based off, you know, if Kraken's price is this, then you get this amount of Satoshis.
Yeah, it's fascinating. It's crazy how intricate it's all getting. Like, because the last time we talked about like contract for difference.
Yeah, I mean, we've really been, yeah, I guess we've been doing some work. I mean, you know, in the day in and day out, it's always hard to not get, you know, that disillusionment. It's like, are we even making progress? It seems like things are going so slow, but this would, when you go and talk about it on a podcast, you're like, oh yeah, we did that, we did this. And then, you know, again, going back to the tooling stuff I was kind of shilling for at the beginning is all this stuff is still very technical and only usable for engineers. And as the DLC protocol solidifies and stabilizes, you know, we're going to be working on tooling for end users. So for instance, in this example of picking multiple oracles that we were just talking about, we would like to do some sort of a checkout experience on our Oracle Explorer. So you can be like, click, I want the Bitfinex Oracle and I like them the most. And then I want Pierre Richard because his tweets are funny and I want him to be my second Oracle. And maybe I don't really like Chris so much because his custody stuff is weird, but I'll throw him in there as the last one. And, you know, have, you know, you pick those oracles and then, you know, pull it down to your local wallet and build all the transactions, and off you go with your DLC for whatever you want to bet for. So like figuring out what stuff makes sense to build things like web tooling for, and then thinking about how to integrate that with like, you know, your self-custody wallet that, you know, you have on your local machine or phone or whatever is something we're looking forward to in the second half of 2021 here.
Yeah, now you put it that way. It's like crazy to think of what these wallets will turn into.
I mean, like wallets there are, like, you know, some of them are podcast apps now.
Yeah,
like, seriously,
right.
It's like, what the hell? If you told me that a year ago, like, why would they do that? Now it's like, oh, this is so cool. I'm using this. And
right.
Like,
so like, can we even call them wallets, or are they like platforms?
Yeah.
What are they?
I mean, like, if you said like, you know, like when the internet started, I was like, you know, this is for sending research papers around. If you told people like, yeah, people are gonna like use VR porn on this thing, or, you know, or play like video games, like shooting each other across the planet, like, what? No, we share research papers on this thing. Why would they use it for that? And now
foundation for a new monetary system
Yeah.
is going to be built on this. No.
So like I think like Bitcoin's gonna have a lot of that, where like a lot of that stuff what sounded crazy a couple of years ago, but it's just like obvious now, or it just makes sense.
Well, I guess like harkening back to Sphinx conversation with Paul Toy, like, are we building a new internet on this? Like, obviously not like the TCP, but like, I don't know, like.
Well, it's like
not building a new internet, but re-architecting the internet in a way with this new layer.
I always think of it as like, the history doesn't repeat itself, but it rhymes. And like, I think that's probably the perfect saying for what's going to happen with Bitcoin, and its integration into the wider internet maybe is the way to put it. And, we're going to get all sorts of cool stuff that we can't even imagine now. And it's going to be awesome. And, I always just think it's like, even just basic financial products is like, can I get like a loan for a day or something like that? Or just like, I don't even know. It's just hard to really fathom about what the possibilities are, but it's programmable money. So really anything you can program into it, I guess, is what's possible.
You need DeFi for that, though.
Nope.
Yeah. Bitcoin DeFi with DLCs.
This is another debate we always have. Should we call it Bitcoin DeFi or not? And
where do you fall in the debate?
I don't think we should, because DeFi has kind of become like a no-no word, and it's associated with rug pulls and scams and all this. But it does encapsulate, kind of what we're doing a lot. But I don't
Yes,
know.
that's why I'm, for the record, I'm on the opposite side of Ben here, and I think you just got to go with the flow at some point, and it seems to be what people know. So
what Ryan Gentry told us is just get a bunch of degens using it, and they'll come up with a meme, and that's what you call it.
Right, exactly.
That's a good idea.
Well,
Peter in American Huddle, right?
Yeah.
Well, let's use this opportunity to basically just draw a line of distinction between the DeFi that's hot right now, Ethereum, Binance Chain, all that jazz, and what you envision it would be in a world built on DLCs on Bitcoin.
Well, I mean, I think just for starters, there's no like tokenomics, or I don't even know if that's the term they use anymore, but it's just like, it is finance. There's just no token stuff added onto it. Like Bitcoin's the token. Like
I think the fundamental, like, most important difference is like you're doing the self-verification of the actual contract versus like having, the Ethereum blockchain do this.
Yeah.
So like, when you see like this, sushi token contract on thing, you can read the code of it and find, how to exploit it and then just take all the money. Whereas with this, like, all my contract logic is off chain in my wallet that I'm not going to reveal to you. So you can't know how to break it even if there was a bug in it. So like, you can't tell that people are even using these things, and like, you can't, like, if you find one critical bug, you're not going to just collapse and just take everyone's money immediately. Like, the worst case scenario is either you cause the wrong outcome to be executed, or you cause people to refund.
Let's dive into that. So you're holding on the logic in your wallet, and instead of on chain, that's much more secure.
Yeah, so like how like an Ethereum contract works is you write this fancy Solidity contract and you publish it on chain, and now people can deposit and like execute functions on that. Whereas with this is like, say me and you are doing a bet, we just sign a bunch of possible transactions that could happen, encrypt them with what we would see the oracle's key would be. Once they sign it, then we can decrypt that and only broadcast a transaction that's the correct outcome. So like our entire contract logic is off chain. It's just which transaction can we decrypt to make valid. So no one else can do that unless they like break into our computers and find those encrypted transactions.
Yeah, it seems much safer.
Well, I mean, to give the devil his due, though, the reason DeFi on Ethereum is so popular is because it's all on chain. These automated market makers, the market itself exists on the Ethereum blockchain so that anybody can send orders or try and execute trades directly on this Ethereum blockchain. And, for all of us Bitcoiners, we're out there thinking, well, this doesn't scale and it's horrible for a bunch of reasons, which is true. But from a market kind of infrastructure perspective, it's very attractive because, everybody has the Ethereum blockchain, don't go too far on running full nodes and stuff like that. But everybody has a view of the Ethereum blockchain and can execute orders against this. Like the way for us to do this on Bitcoin has got to be some sort of lightning solution where, we have these routed channels, or it has to be a centralized platform that's doing the matchmaking as far as I can see. So again, the key thing with the Ethereum DeFi stuff is the matchmaking's happening on chain, and it's also harder to regulate then too. So, there is, not from technological perspectives, but a convenience from being a market participant of having the market live on the blockchain.
It makes like UX a lot easier too, because like they can just have MetaMask call these couple functions and create order, cancel order, whatever. Versus like us, you need to have your like self-hosted wallet or whatever manually verifying all these transactions. So that's a lot more.
And I mean, the bigger thing though is just finding somebody to trade with, right?
That too, yeah.
It's like, well, I want to go sell, a call option or something like that. It's like, well, where do I go find that person to take the other side of the trade? With Ethereum, you just look on the blockchain and see what the market is. With DLCs, you need to have some sort of coordination going on because you need a liquid market to be able to find participants to trade against. And we can't do that on the Bitcoin blockchain. So that means there's got to be some sort of, hosted solution somewhere, whether it's on like Tor or website or, I don't know where, to facilitate the actual market function itself. And that's really the value of Ethereum DeFi is the fact that they're, really abusing the Ethereum blockchain to allow for all these trades to happen on it. So it's a trade-off, I guess. And it's important to give the devil his due because we can learn stuff and figure out, what works, what won't work, and, what wisdom we can glean from what they've done over there. So,
yeah, but I mean, it's a totally solvable problem. Like, we have like decentralized exchanges already on Bitcoin, whether it be like BISC or even like the joint market order book. That's all essentially decentralized, and we don't need to put all of our data onto the blockchain. We can figure out ways to do it off the chain and make it more private, more scalable.
And that's like something we would love to do with DLCs is just integrate into existing places that liquidity exists. Say like with privacy people, like people are looking to get privacy. It's like sometimes there's some synergies between the crowd that wants to speculate and people that want to gain privacy, and maybe we can work together on that front. So all food for thought, I guess.
Flesh that out a little bit. What do you mean?
So if people that want privacy, maybe they're willing to take some sort of conservative bet if it means that they get to mix their coins, or maybe we get a huge group DLC going or something like that to allow the transfer of funds and start obfuscating the transaction graph that way.
Or at the very least, like we could just be like, DLCs could just be, part of just big coin join round. And since we're going to do a transaction anyways, just have like, we're just adding an anonymity to people and saving on fees.
Yeah. So what would the DLC be? Like what?
I mean, it could be anything. You could be betting on the price, betting on Super Bowl, betting on, election. It's just like, instead of like opening our funding transaction just between like just having our own inputs and outputs, we just put inside of a coin join. So now our DLC will execute after the coin join, but we can, we have, we're just like adding to this anonymity set of everyone opening and closing at the same time.
Okay, I guess where I'm confused is somebody just trying to attain privacy leveraging a DLC. Are they making a bet?
I guess to be clear there, they would need to be seeking out like liquidity for whatever privacy functions that they want to obtain, and like maybe DLCs can be part of that way to get enough people to want to mix and then do DLCs along with this, and
so they'd just be another input.
Yeah, so like
separate of the DLC that's executed.
Say like Wasabi's getting like 30 participants an hour. If added like DLCs and say like Lightning as well, maybe they could get 50 participants an hour, and everyone's benefiting from that because they have more anonymity per mix.
Yeah.
I mean that's something I'm kind of hopeful for, is eventually we can get some sort of working together with other teams to again get enough liquidity to allow for liquid markets with DLCs, and hopefully liquid markets when it comes to obtaining like privacy too, or enough. I admittedly am not up to date as much on privacy stuff, but I can't imagine that more liquidity and the privacy protocols is going to be a bad thing for them. Or am I off there, Ben?
No, not at all. I mean, privacy is like best when you're in the bigger crowd. So the more people we get in on it, the better.
Yeah. So, but they do have to be willing to, if they are going to be in a DLC, they have to be willing to be speculating on something or putting funds at stake for something.
I'm more so saying like you could just like mix regular users that are just like mixing their own coins with also people who are executing DLCs.
Yeah.
So like, you know, they're both benefiting from each other without actually like cooperating as much.
Yeah.
So fascinating.
Yeah, again, like the thing though is liquid markets. We want those for DLCs. We want to standardize some contracts that seem to be popular so that we can get the liquidity that we need for making DLCs popular is something at least that I hope we can get to and achieve over the next like year and a half. But all this stuff is hard and takes time, I guess, and resources. So,
Well, you mentioned Lightning as a potential source of liquidity or a matchmaker.
I think
I was more so saying on the CoinJoin side, you just have like, you know, people instead of like opening a Lightning channel in a single transaction, I can open, you know.
No, I'm going back. I'm going back further. Like in the context of DeFi, comparing it to Ethereum DeFi.
Oh yeah, so yeah, I mean it's just basically, you know, all the benefits of Lightning kind of apply with DLCs too, and then with having, you know, what Ethereum DeFi does is have all the market coordination happening on chain. With Lightning, hopefully we can have some of that, use Lightning's toolkit to facilitate some of that coordination over the Lightning network to be able to do DLCs, either having them directly in your channels or, you know, broadcasting Oracle secrets or whatever you want to do.
So like a Sphinx tribe as an order book.
Yeah, something like that, I guess.
That'd be interesting.
Yeah.
Right. Yeah, it'll be fascinating to see how this all evolves.
Yeah, I mean, it's...
Well, now I'm thinking about like Lightning Pool. Is that like a proof of concept or something that could be applied to DLCs and what you're looking for?
I'm honestly not as familiar with Lightning Pool. I haven't read up on it enough to fully understand how it works on a technical level. So, Ben, have you?
I mean, I understand how it works, but I don't know. I think it's kind of like a completely separate entity. Like that's more like, you know, paying for inbound liquidity versus like this is like, you know, I want to bet on this third party, nothing related to Bitcoin thing.
Yeah. All right. Hey, hard problems to solve.
Yeah, I mean, again, it's the hard thing with Bitcoin is none of this coordination happens on chain. It's all off chain, which means that the participants for things need to have a way to communicate with each other to set up these DLCs, Lightning channels, all sorts of different things. So that's really the kind of fundamental difference in architectures between the two chains. And I, you know, firmly believe the choices that Bitcoin has made will scale into the future, decades from now. But it's harder now, I guess, in the moment. So
yeah,
that's a trade-off.
Yeah, I mean, like we know there's solutions. It's really just like picking the right one, and like even if we pick the wrong one, we can just build the other one because we're doing this in like modular and layers. So like, you know, if we screw up trying to do like a Sphinx chat tribe order book, then we know, okay, we can go to the Bisq model or we can go to this model, and you know, it's all doable. And it's not like if we screw it up, it's not like Bitcoin's screwed over. We just try again.
Yeah, and that's something that Sphinx chat really drives home is like the combination of the distributed Bitcoin and Lightning networks and RSS, right, as a content distribution model. You're just combining two distributed things and getting useful out of them. That almost seems more robust too, right? Like more anti-fragile.
I think like the beauty of it is like it's really just like, you know, Lightning requires that I have, you know, a server at home. So it's just like leveraging that. So now instead of like having to store my data on twitter.com or whatever and have them, you know, do whatever they want, now it's just, you know, at my own server, and I can leverage that. And now, you know, now we can encrypt it all, and we can, you know, have it self-custodial, I guess.
Yeah.
Self-custodial. I like that. I like these.
quickly adopted.
He gave me the eyes. I was like, yeah, okay, Chris, I'll say self-custodial. Crazy man.
Self-custodial. It's not non-custodial. Nuance here, freaks. Nuance.
Trying to get brownie points with my bot.
Well, I've been yelled at by Ben many times for writing in the newsletter that the DLCs you're working on are applicable to Lightning Network, and he's like, no, it's not ready for Lightning yet. I think he's done it twice at least now.
Yeah, we need PTLCs most likely, which either, I mean,
they need Schnorr.
No, like with this whole ECDSA adapter SIG thing, we can do it without Schnorr, but like
It's more expensive, right?
Well, it's just also resource investment too. Yeah. It's like, are we gonna invest down this path that we know is going to, be going away in the next year? And like, kind of contradicting myself of what I was saying earlier. It's like, since we aren't there with the Lightning stuff yet, maybe it does make, and it's not pressing to get it done, in the next 3 or 4 months. It maybe is wise to wait until the PTLCs are supported officially in the Lightning Network before we start trying to do DLC stuff in there, rather than rolling our own code and kind of going against the grain with the rest of the network, I guess.
Yeah, like we could do it today, but like we'd have to redo it all like after Taproot's activation. So there's no. Let's just wait for now, and while it seems like it's gonna happen.
Yeah, you guys got other stuff to work on anyway.
Yeah, like us have tons of stuff to work on. Lightning has tons of stuff to work on. Like we're plenty bogged down.
Yeah.
My son has joined us in the room. I'm sorry.
Wait, so Marty
and my wife.
What's the deal with the cow?
Oh yes, we have to get on this. So I was thinking about this. So my family bought a cow. We had a family friend buy a farm, a ranch, and they basically adopted the cattle on the ranch, and the ranch was staying to raise the cattle. And so they said, "Hey, do you guys want to buy a cow?" And I said, "Yeah, I do want to buy a cow."
That's awesome.
And so my parents and I are splitting it. It is 4 months old, 350 pounds, and you were talking about like a DLC on the cow's weight when we slaughter it. And my son's actually going to slaughter. We're going to teach him hard lessons early in his life.
Oh boy!
I mean, I grew up on a farm. There's a lot of hard lessons you learn on a farm from a very early. You learn the circle of life pretty early. Yeah, using a Lion King quote.
The only who's the oracle? Like, can
you? I mean, are you? Unless you're speculating on it too, then you do have a conflict of interest.
Yeah, right.
And you can use Crystal Bull, the tool that Ben has made to do it. It's almost a little bit of a irony there that the tool's called Crystal Bull.
Yeah, it's just like a simple app to be an oracle. So I mean, maybe you can get your family friend to be an oracle.
Right. Well, maybe the freaks will just have to bet on the weight of the cattle when we slaughter.
Well, I mean, this is again what happens in derivatives markets, like actually all the time. It's like, people need to figure out like how much beef is coming out. Do I need to buy some futures contracts to sell or buy these things? It is how, commodities markets work, frankly. So
yeah, no, right. I can't what do you slaughter cows at? Usually like a ton. Do they weigh a ton?
Yeah, probably for beef cattle right around there. I mean, I think it's probably like 18 to 24 months, maybe up to 36. That's a little old though for beef cattle.
Yeah, I think it was like 350 pounds of 4 months.
It'll get up to a ton. What, Angus?
Yes.
Yeah.
Black Angus.
Looked very healthy.
It did.
That's cute.
I want
to pet it.
Well, I guess we can touch on this now. Like you had Untapped Growth on the podcast talking about regenerative cattle ranching a couple of weeks ago. Very hot podcast. I'm very enthralled by the idea and excited about it. You being a farmer, a milk cow farmer, particularly.
Yes, dairy cows.
Dairy cattles. Correct vernacular there. You had some pushback.
Well, I mean, first I want to apologize to Untapped because I came at him a little hot on Twitter. Like that was my bad, and I don't have any problems with what he's doing. It looks great. My bigger concern is just people like to demonize big agriculture like they demonize big energy. That they don't provide any service and are somehow destroying the planet, which is like just totally incorrect in both cases.
Somebody's been getting closer to big energy. Like I can agree with that.
Yeah, I mean, it's just they are providing services to people, and if you get rid of these people, your energy prices are going to double, triple, quadruple. I mean, who knows? Same thing with agriculture. If you get rid of the big agriculture producers, I mean, do you want your food prices to double, triple, quadruple? I mean, that's the trade-off here. And
it's like economies of scale or what?
Yeah, economies of scale. Also. Well, of course, it matters how long you phase them out over. Say, if you do it over 100 years, maybe there's less of an impact than if you get rid of them tomorrow, of course. But I mean, the 20th century told us a lot about tinkering with agriculture and what dangers it can have. And it seems like everybody's forgot those lessons. It seems like to me, where you start messing with the farmers and you forget that you can get the famine that comes with that. So that's more of my overall point for people that criticize agriculture.
And I'm not going to speak for Untapped because I don't think I can do so articulately or accurately, but I think the one thing I gleaned from that conversation is like, what is big agriculture's effect on the topsoil, which is like important, right? Like, but you came into that thread and you said like my family farm, like we don't till we.
Yeah, like speaking to that a little bit is, of course, this is contextual to this is, I was born in the 90s, so I'm speaking from the 1990s forward, whereas some of the research was from before the 1990s.
Hey, son, we're recording.
But so like with our family farm, we do things like, contouring, we do no-till, just all these like basic tactics to make sure you aren't losing your topsoil because most farmers, they care about the land that they own because they plan on passing that down to their next generation and next generation. They don't want to leave the land barren so that it can't do anything. So, I think it's just a little short-sighted to think that, that farmers don't care about their topsoil. It also directly impacts the yield, and that, corresponds to money in their wallet. I guess I should say maybe not this year, but over the long term, if you are farming the land for multiple years, you can't just extract resources and put nothing back in. You're going to get nothing eventually, which is just kind of really against the farmers that I know anyway, is, they really care about generational exchanging of this land. And you got to be thinking for the long term in that case. And maybe the science wasn't as great back in the 60s and 70s when it came to soil management, but farmers are changing and, becoming more modern with the science that's out there for how to best manage this stuff. So, I guess that's my little spiel on that or rant on that. I don't know if that makes sense.
I appreciate your perspective on this because we talked about it the first time you were on your family dairy farm. It's it's fascinating stuff. Big problems, big solutions. We're working on it. We're down here in Austin. We're all moving here.
Hell yeah, we are.
Are you ready for us?
I don't know if the Unchained office is, but but the city is.
Is this going to be the new Bitcoin Mecca, do you think?
It kind of already is. Like, New York was the pinnacle. You had, half the fucking core dev team there and, a lot of really smart minds. And now New York has gone to shit. And it seems like everyone's just like, screw it, I'm going here or to Miami. And it seems like a lot more here.
Yeah. I mean, there's a lot of New Yorkers coming down for
we've
BitDevs tomorrow.
We've had a bunch of New Yorkers who just they just fly in every week or every month and it's like, hi, I'm Bob and I'm from New York. It's like, I just flew in for the meetup. It's like, what the hell? We have tons of people doing that. And also every meetup we have at least 2 or 3 people hi, I'm Bob. I just moved here. It's like, oh wow, we're getting so many people.
What is that going to do for the city of Austin? I mean, you got Tesla here. They're Bitcoin forward. You've got Unchained Capital here. Going to be a stalwart in the Bitcoin.
Chip factories getting started up around here. I mean, it really is amazing.
When's Suredbits getting an office down here? That's what I want to know.
Yeah, I mean, when's Suredbits getting an office? I guess the first question. We're all working remotely right now, and that's worked out well in COVID. But as we grow, I think it probably is inevitable. I don't know if we could. It's an interesting question if you can be a fully remote team and be a really big team, or if you need hubs. I don't know if you actually need a single corporate office. I maybe think you possibly need hubs of an Austin hub or a New York hub or, whatever.
Yeah.
I don't know.
Yeah, we're still completely distributed at Great American Mining. And we're completely spread out. We got 2 in Boston. Currently in Austin, but typically in New Jersey. Potentially in Austin at some point by the end of this summer.
Come on, I guess you'll be here.
Potentially. We've got somebody in an RV, Austin, Louisiana. Engineer in New Hampshire, 1 in Utah, and 1 in North Dakota. Yeah.
I like to hear those teams that are just everywhere and, I guess touching all the places in the United States is always great to hear instead of just everybody lives in San Francisco or everybody lives in New York.
Yeah. I mean, for our line of business, we need. I mean, the oil men live in like North Dakota, and I mean, obviously, there's a lot of oil men here in Texas, but we've got the Bakken oil men on our team up in North Dakota. It's it's interesting times. We're gonna all right, we'll create the cattle DLC. I'll be the Oracle. I guess you freaks got to bet on.
Oh, I gotta teach you how to use Crystal Bowl then.
I can figure it out, I'm sure.
It's pretty easy.
I'm okay in the command line.
And there's no command line.
No?
It's a pretty GUI.
No, we're becoming more modern.
Even better. No, I should be able to figure it out.
Yeah.
I'll set it up. Any freaks out there want to bet on the size of my cow? I'll be the Oracle. I guess I got to stay out of this.
Trust Marty.
Because I'm biased. Yeah.
You also need to make sure, like, what weight are you talking about is, like, you know, lean, like, actual muscle that you can eat, or are you just talking about body weight that you put them on the scale before you actually slaughter them? It's like, you know, we need to hammer out those details.
I think body weight scale.
Okay.
That's probably the best way to do it.
Before my son slaughters them.
He's gonna, yeah. I mean, I wasn't slaughtering cows at that age, but
He'll be like 3 when it happens.
You should be shooting cows by then. Safe.
I'm kidding, freaks. I'm not gonna force my 3-year-old child to slaughter a cow. Gentlemen, thank you for doing this on such short notice.
Anytime, man.
I mean, we all were coordinating separately in the weeks leading up to this, but then today I was like, let's do it today. You drove down, you flew in.
yeah,
Here we
probably
are.
at the right time.
Yeah, feels good. Well, I hope you enjoy the rest of your vacation with your girlfriend.
Yeah, well, I gotta work on the vacation with the girlfriend part and not just hanging out with friends and talking Bitcoin. She doesn't find that as fun as you can imagine.
Are you bringing her to BitDevs tomorrow?
No, I'm not gonna subject her to that torture.
What about barbecue after?
I was thinking about getting her to come to that, but I mean, we go to bed so early. We're old people, and like, you know, that. I mean, what time is BitDevs gonna get over? Like 7:30?
9.
It starts at 7.
Oh my god, I'm not gonna be able to stay up. Jesus,
You old man.
seriously, I'm on that 60-year-old life track, not a 30-year-old.
I got my brother rolling into town. I'm gonna drag him with me. Yeah, throw him into the.
Does he
deep
know
end.
anything about Bitcoin, or is he fresh?
He's you know, I mean, we talk about it obviously a lot. He knows enough to be dangerous. He's never gone to like any Bitcoin events or anything like that.
I think like just going to one of these events, it's always like you're just like, oh, you realize this is so much deeper than I thought.
Yeah.
And you're like, oh, they're arguing over like you know, should this bit be 0 or 1? What the hell? And yeah, okay, this thing is a lot more serious than I thought it is, and I think that's good exposure for people.
Yeah, I'm excited to get him into the fray.
I mean, for people, it's like, yeah, like I went to New York BitDevs and I was like, oh my God, these are my people. Like, this is what I want to be talking about. And, you know, even if you don't understand all the technical stuff, the people you meet, it's great.
I remember your first New York BitDevs.
Yeah, like probably early 2018, maybe late 2017.
Yeah, we had a beer at the Westville after. You were wearing a beanie.
Yeah, that sounds right.
Yeah, you were wearing a beanie and a sweatshirt. There's my photogenic memory coming in.
I was super privileged. My first one was the 100th New York BitDevs.
Oh, yeah.
Like I sat down and Peter Willis sat next to me. I was like, oh my gosh, this is a
God himself.
Yeah, that was a ton of fun.
My first New York BitDevs was right after the quote-unquote Hong Kong agreement. Ross Gianowski was explaining SegWit for the first time. I have notes in one of my journals back home.
Oh, that's cool.
Yeah. Yeah,
you know, you've inspired some Zoomers to take a journal too. I know Jackie, he takes like a daily journal now. It's talking about Bitcoin.
Really? No,
Yeah.
it is cool. I haven't read. The Bend is somewhat of a journal, but the ones I used to write back in there are more personal. I need to get back on. I haven't written in my journal in like 4 months. It's but I do highly recommend it. It is a cool like little like going back to like 2014, 2015 when I was writing like in like every third post that had the price of Bitcoin. I was like, holy shit.
What would you, you know, now that you're here in 2021, what would you have to say about 2014 and 2015 Marty? Is like, wow, he was insightful or stupid or like
he should have been stacking more sats. He should have he should have took a second job.
Buy more.
Yeah.
Sell your blood for plasma.
No, it was
It was. I'm very happy with my journey through my 20s, but I was unemployed for a good while, and I did quit very good paying jobs for very bad paying jobs. But I wouldn't take anything back.
Yeah, you're doing well now, it seems.
Yeah, I'm down here hanging with you two, so
Talking to two losers like us.
Really are off the path.
Yeah, Jesus.
All right, gentlemen. Well, this has been a fascinating conversation. As always, thank you for the work you're doing. I'm very excited about DLCs again. And I say it often. I think people are sleeping on DLCs. I think they're going to be huge. In the work that you guys are putting in, the base level work, that's going to be integral for this technology succeeding decades from now. It does not go underappreciated here at TFTC. So I want to thank you guys.
Yeah, no problem. Hopefully we got more customer-facing stuff coming in the second half of 2021.
That was a look. You just got bent.
Well, there's a lot of work for me in there too. So
yeah, that's a lot of what I've been doing this week because HODL thrusted it upon us. But yeah, it's coming. I made some pretty stuff today, I think.
Yeah,
I like pretty stuff. All right, gentlemen. I'm gonna kick you the hell out of my Airbnb, and I'll see you at BitDevs tomorrow.
Hell yeah, man.
All right. Peace and love, freaks.